Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Before we begin, let's bring you a Bloomberg exclusive. Bajaj Finance has picked bankers for its proposed $1 billion share sale. Anto Anthony of Bloomberg News is joining me with more details. Good afternoon, Anto. What more details do you have? When is this expected? What's the reason for this fundraising?
So Bajaj Finance has picked up Nomura, Kotak and JM Financial to manage this 1 billion share sale. The bankers are told that they want to tap the market in the current year, that is by December, to raise about $1 billion as they seek to expand lending while other shadow financials, non-bank lenders, shrink their loan book. As you know, Bajaj Finance as a financier has remained largely unscathed amid all these turbulence in the credit markets over the last 1 year. Their credit ratings has also remained largely untouched. And the shares has risen more than 23% this year, making it one of the best performers among the BSE Finance Index. So the sense that the bankers are given is that a $1 billion has to be raised by the end of the year. That is somewhere between October and December. And the shareholders' approvals and other approvals are sorted out now.
Okay, Anto, we'll leave it at that. Thanks so much for speaking to Bloomberg Quint, and we'll keep tracking this development as it happens. Let's welcome our guest on the show. Joining me on the show today is Vivek Mavani, a Foram Parekh of Indiabulls Ventures, and Vivek Mavani, who is an independent investment advisor. Many thanks to both of my guests. Let's see what we will talk on Hot Money today. On Hot Money, we'll discuss the auto sector, where sales have fallen to a decade low. We discuss which is the best stock to buy and which is the stock that should be avoided in this auto space. We speak about Muthoot Finance. The stock has seen a lot of downward pressure in the last few days. Obviously, some issues in the state of Kerala have also weighed in on the sentiment of this counter. We'll talk about that. Capital goods and infra names are something that we'll be discussing on the show. We ask our analyst whether they have any picks within this space or it's an avoid totally. And lastly, we ask our analyst whether the worst is over for Britannia. The stock has seen a steady performance in the last 1 month itself after a massive underperformance. So we'll talk about that. But before we go to Yatin, who will talk about the auto space, Vivek, I believe you were saying it's a smart move for Bajaj Finance. Just wanted to get a comment. What did you make of this share sale news?
Well, actually, firstly, it comes as a surprise because nobody was expecting, and they hadn't even indicated any time in the recent past that they intend to raise $1 billion, number one. Number two, given that the tight liquidity conditions for NBFCs, Bajaj Finance, if it comes to the market, they can very easily get $1 billion. But in a limited pool of capital available in the market, if Bajaj Finance takes away $1 billion, it's $1 billion less available for all other NBFCs who are tight or who are much more tighter on capital to sustain the growth. So which is why I see a smart move, because Bajaj Finance would mop up the significant amount of liquidity available for to be invested in NBFCs, which denies growth to other NBFCs, which means over the longer term, Bajaj Finance can be far more aggressive in taking market share away from other NBFCs, which is why I say a smart move.
Okay, you have any comment? You think that they'll be easily able to sail through this QIP or share sale that they're planning?
Yeah, there's no doubt about it, because they will get through the QIP, and even if this wasn't there, all the banks are getting funded and all. So the government did hinted the banks to lend it to the tier 1 NBFC firms, and that's where again Bajaj Finance would have got it. So either ways, Bajaj Finance would have got the funds, and they were looking also for a fundraising plan. So I think this is the right time to pick in the stake, and as he said, it's a very good move. And of course, the growths were intact, and with this, the growths will continue to remain on a higher base, at the same pace. So I think it's a good thing that Bajaj Finance has got this deal.
Okay, now let's start with Hot Money. Let's talk about the auto space. Let's go across to Yatin Mota, who brings us the 5 key highlights to the auto sales numbers that came out in August. Yatin, what stood out in this in the August sales numbers?
Well, Darshan, if you look at the entire auto pack for the month of August, all the categories saw decline coming in, especially the passenger vehicle segment as well as the commercial vehicle segment. Now, if you look at the passenger vehicle segment as well as commercial vehicles, both segments registered sharp double-digit decline on a year-on-year basis. Be it Maruti, Suzuki or Tata Motors, everybody saw deep cuts coming in on a year-on-year basis as far as their August volumes were concerned. In fact, if you look at Maruti's small car performance, the small car segment sales fell by nearly 40% on a year-on-year basis versus a 33% fall in their overall volumes for the month of August year-on-year. And if you look at Tata Motors also, we saw a 58% decline as far as the commercial vehicle business is concerned, this was largely led because of the dealer inventory adjustments that the company made, because of which the wholesales, numbers were quite low for the month of August. Also, talking about Ashok Leyland, we saw August sales decline by 50%. Tata Motors total sales declined by 49%. Maruti Suzuki total sales declined by 33%. And Hero MotoCorp, again the player from the two-wheeler pack, there also the sales declined by 21%. So across the board, there was weakness for the auto numbers this time.
Okay, Yatin, before you go, I also wanted to ask you, and I want to ask my guest about Royal Enfield also. You wrote an article which got very good response in terms of what the problem for Royal Enfield is. So can you tell us in a brief what the issue with Royal Enfield is? Because I also want to ask my guest what they feel about Royal Enfield.
So Darshan, for the last 2 financial years, Eicher Motors, the Royal Enfield business, dealership same-store sales growth declined on a year-on-year basis. Not only that, their Classic 350, which is bulk of their volume, and Bullet 350, which is again a key product, there we saw some clear volume decline coming in. In fact, if you look at the Royal Enfield Bullet 350, they recently launched a new model which was at a 7 to 8% discount to the existing model. And despite that 7 to 8% adjustment in pricing to the new model, we saw the sales did not pick up. In fact, for Royal Enfield, the sales declined significantly and were below estimates for the month of August. So clearly, same-store sales declined for dealerships, flood situation in Kerala, as well as decline in growth for key markets like Maharashtra has led to what Royal Enfield is today, wherein the stock price also got impacted in terms of the overall valuation.
Okay, thanks so much for that, Yatin. Vivek, I'll start with you. Let's talk in detail about the auto sales numbers. A 30, 40, 50% drop in sales. That's the actual number, but all share prices have also corrected by similar matter or more. What's the pecking order now? What would you advise investors to buy on the auto side, and what is the top avoid?
Okay, firstly, a couple of comments that I would like to have about these auto numbers. That perhaps this is the 9th or the 10th month of a slowdown / decline in volumes, domestic volumes for auto companies across the board. I mean, it's for all segments. But if we notice the stock price performance over the last few months, and if I were to take some of the sector leaders, number of stocks have stopped falling, although the negative news month after month continues. So if we were to take Maruti, for example, okay, it has corrected from maybe 10,000 odd levels at all-time high. It isn't falling below 5,500, 5,600. Similarly, for Bajaj Auto, it isn't falling below 2,600 or 2,500 on an extreme. Similarly, Hero MotoCorp for 2,300, 2,400 isn't falling. Mahindra isn't falling less than 500. It's only the commercial vehicles and maybe select stocks like Eicher and all which continue to fall on back of negative news. So the stocks which have stopped falling, my sense is that the worst is already priced in, number one. Maybe the negative news flow in volumes may continue for another few months, but I think they have reached sort of a base as far as valuation is concerned. Technically speaking, maybe there is exhaustion of selling, that whoever needed to sell, whoever wanted to sell in despair has already sold. The new set of buying is yet to emerge, which will come about only when positive news flow starts, maybe a couple of months later. I mean, anybody's guess is as good as in terms of when does a positive news flow start. So I would be a buyer in the two-wheeler stocks, especially Bajaj Auto and Hero MotoCorp. To come back to your key question, the pecking order. So for me, it will be Bajaj Auto, Maruti in the four-wheeler space, and Hero MotoCorp as number 3. I quite like Mahindra also at a price of 500. Only thing that I'm not very comfortable about Mahindra is the complex holding structure. So it gets a holding company discount, being a conglomerate as a holding company for more than 100 subsidiaries within the group and various other businesses. So that's the only discomforting factor in Mahindra, but otherwise at 500 rupees, even Mahindra is fairly comfortable on valuations. A key avoid certainly is Tata Motors, given the global headwinds and talks of recession and problems in China and so on and so forth, where 80% of Tata Motors business is from overseas operations, where China is a very large weightage. So one really doesn't know what's going to happen or what is happening there in the first place today, what is likely to happen. So the Tata Motors for me is a clear avoid. pure domestic businesses like Bajaj, Hero, Maruti are preferred picks. Mahindra as well.
Okay, I'll come to you on Royal Enfield in a while, but before that, Foram, your comment on what did you make of the auto sales? What did you tell your clients? What is it that they should start now accumulating in this space, and what is it something that even if it looks cheap on the price, it's a total avoid?
Yes, if we look at the entire auto numbers and if we dissect it, passenger vehicles, Maruti for the first time has come in 5 digits to its earlier 1 lakh numbers of cars that it used to sell. And now if this trend continues, because they have already hinted for a production cut by December for their diesel cars. So I think market hasn't discounted the fact that Maruti numbers would be now in 5 digits. So I think Maruti would take a more beating is what I presume. And then from the entire pack of automobiles, I think two-wheelers is something that we should go at, because now we have seen the GDP numbers and there is a global there is a domestic slowdown, and we are seeing that rural consumption is also taking a hit. So nowhere the premium segment, if Eicher Motor is going to see the increase in the volume. That is why I like Bajaj Auto and TVS Motors. But now from both the companies, if you see, Bajaj Auto is trading at fair valuations, and I think TVS is little premium over Bajaj. So given the amount of growth that both of them are having, I think I will want to go with a lower valued stock, that is Bajaj Auto. Hero Motor for a very long time haven't been able to deliver the numbers, and I think it's been now more than 20% year on year fall in the sales. So I think from the two-wheelers pack, only Bajaj Auto is what I would want to go. Again, the infrastructure is taking a hit, and with all the PMO reporting to NHAI that they would have to halt the infrastructure projects and all. So commercial vehicle will definitely take a hit, and that is why Ashok Leyland is in a void. Tata Motors is also in a void, because for the first time I feel they have segregated and disclosed the numbers for all their segments. And passenger vehicle, I think it's been degrowing the most amongst the entire passenger vehicles. So Tata Motors is a no for passenger vehicles, and now a commercial vehicle would also take a hit. So it's an absolute no from domestic as well as from the international perspective. Okay,
what's your sense on Royal Enfield? The issue that's happening, stock is already down more than 50%, even at lower prices, and you never thought that Enfield will come out with models at lower prices and there will be always a waiting, but that's actually
because there is a slowdown. People people are losing jobs, and there are fear of more job losses as well, and I think all these negative sentiments is weighing on the premium bike segment. And of course Eicher Motor was trading at premium valuations, and now the growth is not supporting those premium valuations. So with both demand shortfall and valuation premiumness, I think it is going to lose the sheen, and Bajaj Auto might pick up.
Okay, your sense very quickly on Eicher Motors, what's happening?
Well, as far as Eicher is concerned, the only comment I can have about slowdown or fall in volumes for Royal Enfield, and that argument applies for the entire sector. It is not the first time we are having this kind of a situation. I mean, over the last 25 years, every 4 to 5 years or 6 years, there has been 1 year of slowdown/decline in volumes, and there is official data from all the auto companies. There is CM data. There is enough of that out. So it is not the first time this is happening. It is auto sector is cyclical globally, and India is no exception. The trouble in Eicher Motors as far as the stock price is concerned, that between 2012 and 2017, given the 30+% growth rates that it was clocking quarter after quarter, year after year, the stock, the valuation just had become too rich, and it was trading at valuations not of an auto company but maybe a high quality consumer company like a HUL or a Nestle, trading at some 50+ times. So what you have now, a sharp fall, almost 60% fall from the top, or maybe more, close to 70% fall from the top, is the contraction of valuation multiples, which is hitting Eicher more than the challenges on Royal Enfield.
Okay, so that's the view that we've had on the auto space that went on for a while, but let's move on. We have 3 other stocks to discuss. Muthoot Finance is the next one. Obviously challenges there. Shefali Malik will tell us why the stock has been falling. Shefali, what's gone wrong for the company of late?
Well, the challenge is there in the state of Kerala, where there's this union which is called CITU, that is Centre for Indian Trade Union, that is supporting some of the employees to strike in this state, and hence the company is facing a lot of trouble. So they have total about 611 branches in the state, out of which 300 are not functioning right now because this trade union is not letting these branches function, and even the employees who want to go and work, so they are disrupting that. So that is what is causing trouble. So they have already shut down 15 branches, and the company is tired of the repeated strikes by the union, and now they are thinking of permanently shutting down these 300 branches. So that is what is causing trouble. But if you look at the numbers, it may not have very meaningful impact because Kerala contributes about 4% to the overall business. In terms of profits, it's about 1%. AUMs 4%, like I mentioned, branches 14%, and employees 13%. So in terms of financials, it may not be a very big impact, but certainly because it's a Kerala-based company, and so that is why it's going to be meaningful, and it's certainly going to be a sentimental impact for sure.
The view that's coming in on Muthoot Finance, what's your sense, Foram? It's corrected significantly. What did you make of this issue of this Kerala, and what should one do?
Yeah, so there is a negative sentiments, of course, what we have heard about the Kerala thing, and I feel that it has reported very good set of numbers. Now the mortgage that, gold that it takes, gold prices are at such a high. So I feel that when there's no problem in the operation side, and of course Kerala is a very small pie, in its revenue and profitability. So we should capitalize on this opportunity and the fact that it's trading at such, attractive valuations. So I think one should definitely capitalize and take it for a long-term horizon.
Okay, you're bullish on the counter.
Yeah.
What's your sense on Muthoot Finance? Buy at this level, or you think there could be more trouble?
Well, I don't know about the troubles related to this union issue in Kerala as to how prolonged it could be and whether it could spread. I mean, right now the problem, according to the management, the problem is restricted to 15 branches. We don't know if it spreads to 100 branches or maybe, all the branches across Kerala. We really don't know that. So I'm going to reserve my comment about that union issue, which seems quite strange that for the first time we hear of this kind of issue in white-collared jobs. We've heard of all these issues in factory labor kind of situations. Maruti has had it, Hero has had it, at some point of time even Bajaj has had it, but to think of it in this kind of a NBFC financing business to come up is quite unusual. More importantly, stock price may be under some pressure, but if you look at it from an all-time high, from about 650, it's about 590 now, so it's just about 10% decline amidst much larger erosion over the last 1 year or maybe 1.5 years for most NBFCs. So in relatively speaking, Muthoot Finance is still very strong. Only thing, over a period of time, the business profile of Muthoot Finance is likely to change away from gold finance, where non-gold loans is going to have a larger share relative to gold loans. Gold loans, of course, will continue to grow, but as a revenue mix, non-gold will increase the pie, which should result in shrinkage of net interest margins, because non-gold, the interest rate, the lending rates would be lower than the gold lending rates, and the cost of capital, of course, is the same for both. And hence, and lately, last couple of quarters, also what has happened is that gross NPAs have sort of been moving up sharply, close to about 2.5% now. So that's an added concern. From a valuation point of view, about 2.5 times or maybe close to 3 times price to book for current year may seem richly valued. So over a period of time, the valuations could erode, not necessarily by a sharp fall in stock price, but maybe a flattish stock when earnings increasing over a period of time. But I would be neutral on Muthoot Finance. I don't see a trade in terms of an investment or a trading opportunity at this price.
Okay, that's the view that's coming in. The next topic we want to discuss is basically the capital goods and infra space. Nothing much is happening. Again, trouble brewing in when the PMO is indicating that some of the models that NHAI is working on is not viable. There could be some bit of issues there. Capital goods, we've seen what's happened with companies like BHEL. Orders are certainly not there. Is there anything that looks attractive in this space? While some of the MNC companies have done well, is there anything that looks attractive in here? Is something that we'll ask, I guess. Vivek, anything in this space, capital goods, infra, that is worth investment opportunity? At least let's take a 1 year perspective.
Well, so within the capital goods and infrastructure, if I were to extend that to even power and power ancillaries, Then power transmission and distribution space certainly seems to be doing quite well, where they don't really have a problem on growth. They don't really have problem on payments, liquidity, or ordering cycle. So there, the cable companies and the transformer companies, both of which are in the power transmission distribution, and huge amount of infrastructure investment is happening in the T&D space more than the generation space. So which probably answers your question as to why BHEL is devoid of orders, because there's not much of new thermal capacity being planned or likely to be set up in the next couple of years. So there I remain positive on a company called KEI Industries, which is second largest cable company across the board in high tension, low tension, house wires, including power EPC projects, again in the transmission distribution space, and Voltam transformers, which are into distribution transformers. Other parts of capital goods and infrastructure, we are still not out of the woods in terms of the investment cycle. So the new ordering is still slow and muted from the non-government sector. Government sector so far was holding on fine, but there also probably there could be a slowdown given fiscal constraints.
Okay.
The liquidity issues in terms of payment cycles, working capital cycles, I mean those age-old problems continue with most infrastructure companies. Okay. And just lastly, all infrastructure companies would want to, I mean especially in the road sector and infrastructure sector, would want to hive off and sell their toll assets.
Okay.
But devoid of buyers.
Okay. What's your sense, Foram, on this space?
Yeah, so in infra, I would want to go with rail infrastructure and with airports. Road infra is a complete no at this point in time, because of course PMO has hinted NHAI, and with this the road companies who were earlier bidding their orders via HAM and EPC business would now have to go through the BOT business, which means they would have to infuse their own equity and would have to take from the bank the loans. So which would definitely weigh on their profitability, because they have to pay more interest now. So that is why road infrastructure is a complete no. And from the railways, we have seen the newly listed RVNL has been doing good. I mean, we are seeing with the immense kind of development happening from all the railway, restructuring and redevelopment. So I think in long-term perspective, railway infrastructure will continue to do good. And CAPEX, I mean, we are not seeing much of private CAPEX happening, and that would definitely weigh on the capital goods sector. And that is why capital goods is also a complete avoid from my end.
Okay, that's the view that's coming in. And before we speak to analyst on Britannia, let's get in Agam, who will highlight what has led to the Britannia's recent outperformance and what are analysts making of the same. Agam, what's gone wrong for Britannia? It's managed to recover also. So what's the status on Britannia?
Sure, Darshan. So I'm sure we do know and are aware about that. The fact that Britannia through the course of the year has seen a lot of weakness. In fact, it came off quite substantially from levels of well over 3,200 rupees per share at one point in time to as much as 2,300 rupees per share just a few weeks ago. But after that, we have seen an advance on the stock. And in fact, from the low of 2,300 rupees, then it has advanced by as much as 17%. Currently, it currently stands at around 55 times forward earnings. At 2,300 rupees, it did move in at around 48 times, and that is below the 5-year average, which is why there has been a little bit of mean reversion which is taking place. A lot of analysts did find value in Britannia at around 2,300 rupees per share, which is why you have seen the stock move back and it is currently in line with its 5-year price to earnings ratio of around 55 times. As far as analysts are concerned, there is a 45% buy on the Bloomberg consensus with a price target of 2,787 rupees per share. So about a 4 to 5% up move from current market levels expected, but not too much. And well, as far as the outlook is concerned, sure, the demand sentiment is certainly very, very dampened and subdued. But a lot of analysts are suggesting that if you were to make a defensive bet, you may as well stay with Britannia. Why? Because it outclasses unlisted players across all parameters. It has strong earnings to cash conversion, and it has very good free cash flow generation, which is why they would prefer remaining with Britannia as compared to, well, several other companies possibly.
Okay, thanks so much for that, Agam. Foram, we're running out of time, so 1 minute tops. What did you make? You heard the arguments for and against, so what are you recommending to your investors on Britannia?
I would want to stay away from Britannia because, of course, we have seen 2 quarters when there were consumption slowdown. Many FMCG companies did manage to report good set of numbers, 8 to 10% volume growth, and Britannia even during that time had reported 5% volume growth. So I would want to go with the better performing ones, and even management had hinted that they are finding the biscuit segment very competitive and no demand and all. So of course the entire biscuit segment is competitive, and probably now when there is official slowdown and we are seeing a lot of negative sentiments hovering around, so demand would definitely weigh in the performance, and let's see how do they manage to now pick up the volume growth, and if it comes nice, I would want to turn my recommendation.
Okay, so wait and watch, but stay away from Britannia. Vivek, a minute tops. What's your sense on Britannia?
Well, even for me, it's an avoid. Basically, 3 reasons. Was slowdown of growth is obviously mentioned. The other is increased competition leading to some pressure on margins, and increased competition actually comes from Amul, which has got into the biscuits area and has got fairly aggressive plans. The third is the valuations not to comfort at about 55 times earnings in light of slowdown and some pressure on margins, but would prefer other consumer plays, not Britannia.
Okay, that's the view that's coming in. I think at this point of time, Britannia is a no by both the analysts. But with that, we're timed out, and it's a wrap on this edition of Hot Money. Many thanks to my guest, Foram. Thanks so much. Vivek, thank you so much for coming in today. Ask BQ comes up next. Stay tuned to Bloomberg Quint.